Welcome back, everybody, to the deep dive. Today we're really going to get into the psychology behind the stock markets in this digital age we live in.
Yeah.
And we're going to be using some excerpts from Psychology of Stocks in the Digital Age, a book by Lars Goran Bostrom. It was published in 2024.
Okay.
To, try and give you some practical takeaways for navigating today's market.
Right.
It's
And what I find so interesting about this book,
Yeah.
that Bostrom uses Jesse Livermore,
Yeah.
The legendary trader,
Oh, yeah.
as a lens
Mm-hmm.
to examine the modern market.
Oh, that's cool.
Imagine if he time traveled to 2024, what would shock him?
Right.
What timeless wisdom would still apply?
Okay, yeah, that's a great premise. So let's start with some of the basics. Whether you're a seasoned investor or just kind of dipping your toes into the market, the human element is still key to understanding the markets.
Yeah, absolutely.
That much hasn't changed, right?
No, the core emotions driving the markets are the same.
Yeah.
Fear, greed, hope.
Right.
But the digital age has fundamentally changed the speed and the scale
Yeah.
at which these emotions play out. It's like we've gone from kind of a leisurely stroll through the market to like a roller coaster ride.
Yeah.
Fueled by algorithms and social media.
Okay, so buckle up, everyone. So Bostrom really dives into three major forces
Yes.
that are shaping this new landscape.
Yeah.
Frictionless trading apps, social media echo chambers, and the dominance of algorithms. So let's break those down a little bit.
Okay.
First up, frictionless trading apps. You've got this incredibly powerful tool right there in your pocket.
Yeah.
But how do you avoid the pitfalls that Bostrom kind of highlights in the book?
Yeah, I mean, it's amazing that anyone with a smartphone can now potentially access the market.
Right.
But that ease of access can be incredibly dangerous for inexperienced investors.
Yeah.
You think about it with a few taps.
Right.
You can buy or sell stocks based on fleeting trends or social media hype.
Yeah.
And Bostrom argues that this often leads to impulsive decisions and ultimately, underperformance.
Right. It makes sense. It's easy to get caught up in that excitement, especially when you see, other people seemingly making these quick profits.
Exactly. And that brings us to the second force.
Okay.
Social media as an echo chamber.
Right.
We're constantly bombarded with information.
Yeah, that's overwhelming.
But it's so difficult to separate, what's real and what's not.
The signal from the noise. Yeah.
Yeah. And these platforms are designed to keep us engaged.
Right. Right.
Not necessarily to provide accurate or unbiased information.
It's like you're trying to drink from a fire hose of financial advice and memes and hot takes all at the same time.
Exactly.
So how can we navigate that? Does Bostrom offer any advice?
He stresses the importance of critical thinking and source evaluation.
Okay.
Don't just blindly follow the crowd or the latest trending hashtag.
Right.
Do your own research. Consider multiple perspectives.
Yeah.
And be very wary of anyone promising easy riches.
That's good advice. Solid advice. Okay, so let's move on to that third force, the dominance of algorithms.
Okay.
You've probably heard about these mysterious algorithms,
Right.
that are controlling the market.
Right.
Bostrom breaks down this whole idea of, they
Right.
who are pulling the strings.
Right. And he emphasizes that they are not some sort of monolithic entity
Right.
or, shadowy cabal.
Right. It's really a complex interplay of different forces.
Exactly.
So who are the major players in this game?
Well, first you have the institutional investors.
Okay.
Think BlackRock, Vanguard pension funds.
Right.
These giants manage trillions of dollars.
Yeah.
And their moves create huge ripple effects.
Right.
Then there are the algorithmic trading systems
Okay.
used by hedge funds and quant firms.
Okay.
These algorithms are designed to exploit inefficiencies and execute trades at lightning speed,
Yeah.
often driving market volatility.
And then you've got the high-frequency trading firms taking that speed, to a whole other level.
Right.
They use these super powerful computers and sophisticated algorithms
Right.
to exploit these tiny price discrepancies, making thousands of trades per second.
It's crazy.
It is crazy. And we can't forget about the retail investors,
Yeah.
newly empowered by social media and
Yeah.
commission-free trading apps.
Right.
Remember the GameStop short squeeze?
Oh, yeah. How could we forget?
That was retail investors coordinating their actions
Yeah.
and really challenging Wall Street.
Yeah. It was a wild ride.
It was a wild ride. It definitely showed the potential power of retail investors
Yeah.
when they act collectively.
For sure.
But is that the norm or more of an exception? Does Bostrom think retail investors generally succeed in this environment?
He acknowledges their potential to disrupt the market,
Okay.
but he also cautions that they often lack the discipline and the long-term perspective
Right.
needed for consistent success. He argues that many fall prey to emotional biases
Yeah.
and get caught up in short-term speculation.
So while the GameStop situation was a fascinating case study,
Yeah.
it's not necessarily a blueprint for success.
Right.
Okay, and to kind of round out this ecosystem,
Yes.
we have the media,
Of course.
both traditional and social, playing a huge role in shaping narratives
Yeah.
and influencing market sentiment.
Absolutely.
Bostrom even highlights a couple of cases where misleading reporting
Yes.
had a real impact on stock prices.
Yeah, for sure.
He mentions the CrowdStrike outage last year. Remember that?
Oh, yeah, I remember that.
Initial reports of a major disruption, amplified by media coverage,
Yeah.
led to a sharp drop in their stock,
Yeah.
even though the issue was quickly resolved.
Exactly. It shows how fear and uncertainty can spread so rapidly in the digital age,
Right, yeah.
sometimes outpacing the facts on the ground.
Yeah, and he also discusses the case of Soltec Energy,
Yeah.
where misleading analysis from a well-respected media outlet
Yeah.
triggered a sell-off in their stock.
Yeah. So it's not just social media hype.
Right.
Even established media outlets
Yeah.
can contribute to market volatility.
Right.
Sometimes intentionally, sometimes not.
So it's about being critical consumers of information,
Yeah, always.
especially in today's hyper-connected world.
Absolutely.
Don't just take the headlines at face value.
Yep.
Dig deeper, consider the source, look for multiple perspectives.
Right.
So we've got this complex interplay of human psychology, cutting-edge technology, information overload,
Yeah.
all converging in the stock market.
That's a lot.
It feels like a recipe for both opportunity and chaos.
Yeah, I think that's a great way to put it.
That's exactly what makes understanding the psychology of stocks in the digital age
Yeah.
so important.
Right.
It's not just about making money.
Right.
It's about navigating a landscape that's fundamentally different than it was even just a few years ago. And as we dig deeper into Bostrom's book, we're going to explore how artificial intelligence
Yes.
is adding a whole new layer of complexity
AI.
to the game.
It's a whole new ball game.
AI in the stock market. This is where it gets really interesting.
Yeah, let's dive into that right after this.
Okay. All right, so we're back and ready to kind of explore this whole world of AI in the stock market.
Yeah.
It's something that, sparks excitement and a little apprehension.
Yeah.
Are we talking about machines taking over Wall Street here?
Well, yeah, Bostrom doesn't quite paint that dystopian picture,
Okay.
but he does make it clear that AI is already a powerful force in the market.
Yeah.
And it's not just about algorithms, following pre-programmed rules anymore. We're talking about AI that learns, adapts,
Right.
and potentially outmaneuvers us
Right.
ways that we're only beginning to understand.
Okay, so less Terminator, more like a super intelligent trading assistant.
Right.
But how does this actually play out? Like, give me a real world example.
Well, let's talk about sentiment analysis.
Okay.
AI is getting incredibly good at reading the emotional temperature of the market.
Okay.
It can analyze news articles, social media posts,
Wow.
even online forums to gauge whether people are feeling bullish or bearish
Okay.
about a particular stock.
So it's not just crunching numbers anymore. It's like it's tapping into the psychological side of investing.
Exactly.
Does Bostrom believe that AI can actually grasp those subtle nuances of human emotion? Or is it more about recognizing patterns?
Well, that's a key question. And Bostrom argues that AI's strength really lies in its ability to process vast amounts of data
Right.
and identify those complex correlations that we humans might miss.
Yeah.
It's not necessarily about understanding emotions in the same way that we do,
Right.
but rather about recognizing the patterns and the signals that often precede market shifts.
So it's like AI is giving us this glimpse into the collective subconscious of the market.
Yeah,
That's both fascinating and a bit spooky.
it is.
What are some other ways that AI is being used in trading these days?
Well, hedge funds and other institutions are using AI to develop what they call self-learning systems.
Okay.
These systems can analyze market data, identify trends,
Okay.
and even execute trades autonomously.
Wow.
And they're constantly refining their strategies based on feedback,
Okay.
essentially evolving along with the market.
So it's like having a trading bot that never sleeps, never gets emotional, and is always learning.
Right.
That sounds like a pretty formidable opponent.
It is, and some AI systems are even capable of recognizing, complex patterns that humans might overlook.
Yeah?
They can potentially identify opportunities that we wouldn't even see.
This is all pretty impressive, but it also raises some concerns. What about the potential risks of AI going rogue?
Yeah.
Could it manipulate the market for its own gain?
Well, that's a valid concern, and it's one that, regulators are definitely grappling with.
Okay.
There's this thing called the black box problem,
Okay.
where AI models become so complex
Right.
that even their creators don't fully understand how they arrive at their
Yeah.
conclusions. And this lack of transparency, can make it really difficult
Right.
to identify incorrect errors or biases.
It's a bit unsettling. It's like trusting a system that we don't even fully comprehend.
Right. And then there's the risk of unintended consequences.
Right.
AI systems are designed to achieve specific goals,
Uh-huh.
but, they might find unforeseen ways to achieve those goals.
Right.
Potentially leading to market instability.
Yeah. Think back to the flash crash of 2010.
Yeah.
While the exact cause is still debated.
Right. Yeah.
It's widely believed that algorithmic trading played a role in amplifying that sell-off.
For sure.
So even without the advanced AI we have today,
Right.
algorithms were already capable of causing, pretty significant market disruptions.
Yeah.
That's a sobering thought.
It is, and it really highlights the importance of careful oversight
Yeah.
and regulation. As AI becomes more sophisticated and more integrated into the financial system.
We need to make sure we're using this technology responsibly.
Yes.
And not creating some kind of monster that we can't control.
Yeah, for sure.
Speaking of monsters, Bostrom also brings up the potential threat of deep fakes in the financial market.
Right. Yeah, that's a particularly chilling scenario.
Yeah.
Imagine a deepfake video of a CEO announcing a major scandal or a fabricated earnings report.
Right.
It could trigger a panic selling.
Right.
Send shockwaves through the market.
It's like the ultimate form of market manipulation. You wouldn't even know who or what to believe.
Exactly. And it really underscores the need for vigilance and critical thinking.
Right.
In the digital age.
Yeah. Yeah.
Don't take anything at face value. Verify information from multiple sources.
Yeah.
Be especially wary of sensational or emotionally charged content.
So it's not just about understanding AI and its capabilities. It's about, developing the skills and the mindset to navigate this increasingly complex information landscape.
Absolutely. That's precisely what Bostrom emphasizes.
Okay.
He argues that in this AI-driven world, discipline and a long-term perspective are more crucial now than ever.
Yeah.
It's not about trying to outsmart the machines,
right,
but rather about focusing on what we can control.
Okay. And that brings us back to Jesse Livermore.
Yeah.
Does Bostrom offer any insights on how, Livermore's wisdom might apply in this age of AI?
Well, he imagines Livermore facing a wild day in today's market.
Yeah.
His portfolio plummeting
Yeah.
as algorithms react to, some unexpected news
Right.
or, social media frenzy.
Right.
And he suggests that Livermore's advice would still hold true.
Okay.
Step back, regain control of your emotions,
Yeah.
and assess the situation rationally.
Don't panic sell just because an algorithm is spooked or social media is melting down.
Exactly.
Yeah, that's a good reminder. It's easy to get caught up in the moment,
Yeah.
make those impulsive decisions.
Yeah, especially when you see, those numbers flashing red on your screen.
Your screen. Yeah. Yeah.
But ultimately, it's about sticking to your investment strategy
Right.
and not letting emotions or algorithms dictate your actions.
Exactly. And that leads us to a really fascinating concept that Bostrom explores in the next section of the book.
Reflexivity.
Reflexivity.
Yeah.
So it's not just about AI reacting to the market,
Right.
but also shaping the market
Right.
through its actions.
Right.
That sounds like a recipe for some serious mind-bending paradoxes.
It does. And in the digital age, where information spreads at lightning speed
Right.
and algorithms are constantly reacting,
Yeah.
reflexivity can operate at hyperspeed.
Oh, wow.
But we'll delve into all of that right after this. Stay tuned.
All right, so we're back and ready to unpack this whole idea of reflexivity. It's one of those concepts that kind of makes my head spin a little bit.
Yeah.
So remind me again, what is reflexivity all about?
Well, it's a theory that was really popularized by George Soros.
Okay.
And it suggests that our beliefs about the market can actually influence its behavior.
Okay.
So it's not just about fundamentals driving prices. It's a two-way street where perceptions shape reality.
Right.
And then reality in turn shapes perceptions.
So it's kind of like a self-fulfilling prophecy.
Exactly.
If enough people believe a stock is going to go up, their buying activity will actually push the price up.
Right.
Regardless of, the company's underlying fundamentals.
Precisely. And in the digital age, this whole dynamic has been supercharged
Okay.
Information spreads so rapidly now, thanks to social media, the 24/7 news cycle,
All right.
that reflexivity can operate at lightning speed.
It's like the market is constantly reacting to its own reflection in a way.
Yeah,
But can you give me like a concrete example of how this plays out in the real world?
sure. Remember that GameStop saga that we talked about earlier?
Yeah,
That
yeah.
was a classic case of reflexivity in action. The initial narrative that spread through those online forums
Uh,
was that retail investors could band together
right.
to squeeze the hedge funds that were shorting the stock.
Right. It was that classic David versus Goliath story
Yeah,
that really captured the imagination of a lot of people.
for sure.
But how did reflexivity actually play a role in that?
Well, as more and more people kind of bought into that narrative and started buying GameStop stock,
Yeah.
the price actually started to go up.
Right.
And this in turn, reinforced the belief that the squeeze was working,
Uh-huh.
attracting even more buyers
Yeah.
and pushing the price even higher.
Wow.
It became this self-fulfilling prophecy
Right.
driven by social media and the collective belief
Yeah.
of this large group of retail investors.
So it wasn't just about the fundamentals of GameStop as a company.
Right.
It was about the narrative that took hold in the market.
Exactly.
But does Bostrom see this as a sustainable phenomenon or more of an anomaly?
He acknowledges that the GameStop situation was very unique in many ways,
Right.
but he also points out that this kind of reflexive dynamic
Yeah.
is becoming increasingly common in the digital age.
Okay.
And, algorithms can also play a significant role in amplifying these feedback loops.
Right, because those algorithms are constantly scanning the market for patterns and trends.
Exactly.
So if they detect a surge in buying activity,
Yeah.
they might jump on the bandwagon,
Right.
even if that surge is based on, nothing more than sentiment or speculation.
Exactly. Algorithms can react to these shifts in sentiment
Right.
and further accelerate price movements,
Yeah.
creating this sort of echo chamber effect.
Right.
And this can lead to market bubbles or crashes that are totally detached from underlying fundamentals.
So we have human psychology and algorithmic trading both kind of contributing to this supercharged version of reflexivity.
Right.
It's no wonder the market feels so volatile these days.
It's a very complex and dynamic landscape, that's for sure. But Bostrom argues that even in this environment, there are ways to navigate these challenges.
Okay.
He stresses the importance of understanding how algorithms work
Right.
and their potential impact on market dynamics.
So we need to become more algorithm savvy in a way.
In a way, yeah.
But for those of us who aren't, programmers or data scientists, is that even possible?
Well, it's not about becoming, an expert in coding,
Okay.
but rather about developing a basic understanding of
Right.
how these systems operate and, and their potential limitations.
Okay.
Remember, algorithms are still created by humans.
Right.
And those humans can make mistakes or introduce biases
Right.
into their creations.
That is reassuring.
Yeah,
So even in this age of AI, there's still a place for human judgment and analysis.
absolutely. Bostrom argues that in this AI-driven world, discipline and a long-term perspective are more crucial than ever.
Okay.
He brings back that story of Jesse Livermore
Yeah.
and imagines him facing a wild day in today's market with his portfolio, taking a hit
Yeah.
as algorithms react to some, unexpected news.
So how would Livermore handle this kind of situation?
Well, Bostrom suggests that Livermore's advice would still hold true.
Okay.
Step back, regain control of your emotions,
Yeah.
and assess the situation rationally.
Don't get spooked by the algorithms or the social media frenzy.
Is that correct?
It's about focusing on those fundamentals of the companies that you're investing in.
Right.
And not letting those short-term market swings dictate your actions.
Precisely. That's a very timeless piece of advice.
Yeah,
That's especially relevant in today's fast-paced market.
absolutely. And ultimately, it comes down to developing a sound investment philosophy.
Yeah.
One that's grounded in research and analysis,
Right.
not driven by fear or greed.
Well said.
That's great advice. But as we wrap up this deep dive into the psychology of stocks in the digital age,
Yeah.
I'm left with this kind of lingering question. If algorithms are becoming so sophisticated and influential, where does that leave human intuition and insight?
That's the question that Bostrom really leaves us to ponder.
Yeah.
Are we heading towards this kind of algotrecracy where machines dominate the market
Right.
Or will there always be a role for human ingenuity and intuition?
It's a fascinating and somewhat unsettling thought.
It is.
As investors, we need to be aware of these trends and adapt our strategies accordingly.
Yeah.
But perhaps the most important takeaway is that even in this age of AI, the fundamentals of sound investing haven't changed.
Right.
It's about doing your research, understanding the businesses you're investing in, and staying focused on the long term.
Well said. And remember, knowledge is power.
Yeah.
The more you understand about the forces that are shaping the market, the better equipped you'll be to navigate, the challenges and opportunities that lie ahead.
That's a great note to end on.
Yeah.
Well, thanks for joining us on this deep dive into the psychology of stocks in the digital age.
My pleasure.
We'll be back soon with another episode exploring a new and fascinating topic.
Sounds good.
Until then, stay curious and keep exploring.